Hello and good morning. I welcome you to the morning meeting today on Tuesday, the 2nd of January 2018. This is Jens speaking and exclusively presenting this format to you here for JFD Brokers. So first of all, I want to wish you a happy new year and that the pips and points in the markets may be with you, maybe with us. And in fact, let's just hope that the year 2018 will be as successful and even more successful than the last year. 2017 hopefully has been. So here, first of all, the risk disclaimer, and then we'll start with the action. And you can see here already that the DAX obviously has seen some losses in the morning pushed below 12,800 points, as low as 12,746 here, and can recover right now, even though it's likely that probably there will be further losses in the near term here, and that we get to see another push lower. So far it seems as if, and here's the hourly chart, as if the market can hold the region around 12,800 points here. And as you can see here, for example, we made lower lows in the morning right here in the RSI 14. The market probably is right now building a bullish divergence, but nevertheless the thing is that here with this bullish divergence forming, that here probably the market is about to see a pullback, even though everything below the highs from the first hour of trading here around 7 a.m. till 8 a.m. GMT, the first hour of trading in the future DAX in this case, so before the spot market open, everything below 12,950 points should be definitely considered bearish. I think when looking at the daily chart here, everything in fact below 13,350 points here should be probably considered bearish, and there's a quite high chance that rather sooner or later there will be another attack at this yellow line here, which is in fact the simple moving average 200. And as you may know, this simple moving average 200 here is considered to be, even though rough, but nevertheless a trend indicator. And as long as we trade above that level, the market should be considered bullish. Nevertheless, once we break below that, that's the first sign that probably further losses in the near term are likely. And so we've seen attack here in August, at the end of August here, and the market in fact closed slightly below that level, even though bounced aggressively back and then pushed above 12,300 points and higher from there. We've seen new all-time highs around 13,500 points. This time probably is different, let's say. And what I mean by that is very simple. Have a look at what is the main driver for this current push in the DAX here on the downside. It's definitely the euro. So the euro is pushing back above 120 here, and right here aiming for the highs of 2017 around 121. And I think we have further potential on the upside here up to 125, probably also 130 in the upcoming weeks and months, if this momentum continues here. By the way, there are already several very, very important news coming out in the upcoming days in the first week of trading 2018. So we have the ISM, manufacturing, non-manufacturing, ADP, we have the non-farm payrolls on Friday, and all this. Also, by the way, we have the Fed minutes, which will be published on Wednesday. And if there's a hint which is showing some kind of more dovish expectations or speculations around a more dovish stance of the Fed here in 2018, this US dollar weakness could continue, and then combination with market participants expecting a more hawkish ECB to come probably. So not just that we see reduced asset purchases from the ECB now from January onwards till September, but also that there will be kind of rhetoric which hints to a more aggressive end of the QE program, probably some more aggressive attempts here to hike rates then shortly after the QE program ends. All this in combination can easily push the euro higher and lead towards or push us towards the region around 130. And with this in mind, if you take this in mind, this combination could easily bring the DAX or push the DAX lower here. And not just that we see an attack at this region around 12,600 points if the market continues here on the downside to perform and the bears are in charge of the action, but also that you should keep in mind that, and this is by the way also a reason why I mentioned very specifically the euro here. Have a look at what the Dow Jones is providing us here, for example, and not just the Dow Jones but also the S&P 500. So I haven't, by the way, adapted anything here in terms of the intraday action that will shortly follow. So you can see here, yes, the market has shown some weakness here. The S&P the Dow Jones can perform very good right here, mainly based on the tax reform taking place right now. But it's also that nevertheless the S&P is very solid here, even though you can probably and many can probably think about and see already the market probably start to see a more corrective move. And if this really happens, in combination with the weaker euro, weaker US equities here could push the DAX very significantly lower and let it significantly push below this 200 simple moving average here, 200 SMA 200, and probably result in further losses then, which will easily push us as low as 12,000 points and below that, and down towards the levels seen here at the end of August, around 11,900 points. So all in all, the overall picture of the DAX is not a very positive one. That's definitely something we have to see here, even though the market can recover slightly right now. From an intraday perspective, I'm definitely watch the current or here this blue line, which is the exponential moving average 50. It usually acts not just as a trend filter and my open range breakout approach, but it's also very interesting to see that the market during the last months here respected this level quite often as a resistance, respectively support, depending on which side we were trading here. And what I told the audience in the German version of this morning meeting here was that I wouldn't short the market here at this level, but wait for a pullback towards this exponential moving average 50 here. And if we now make it back to this level and stabilize around this level, this is probably a good region then to consider short engagements against, and probably see this region as a potential trigger here. So definitely also intraday, from an intraday perspective, short engagements should be favored, and potential target on the downside, first potential target can be found around the highs here from July, around 12,680 points, 700, and below that again the simple moving average 200 here, 12,600, well 12,620, 12,630 points. Yeah, so that's it on the DAX. It's also in fact on the euro. What I prefer is in fact that the euro probably sees a pullback here down towards 119.50 around, against which I then try to position myself long against, with a target of breaking a significant break of 121 and a push above that level, bringing us up to 125 in the next weeks and months. The only thing is, if the data which is coming in the upcoming days here disappoints here, it could easily be that this is then potential driver for further gains here, which could easily, even though we are already quite extended on the upside, which could easily push us above 121 in one straight move. And then probably we should wait for a break to happen here and a pullback towards these highs here from the beginning of September. Yes, so that's it on the Euro USD. The picture is very similar in the GBP here, as you can see. In GBP USD, we are right here aiming for a 136. There are several other data coming out, which could push us in the upcoming days. Purchasing manager indexes. Yeah, that's right. And they could easily push us above the highs here from 2017, above the highs here from the 20th of September 2017. Even though you should remember that the main driver right here is not necessarily any economic data coming out, but it's more the negotiations around the Brexit and everything, which could hint here to a good solution, let's call it, for Great Britain, especially in terms of a potential, let's call them Brexit bills, which are probably reduced to the downside. That could push GBP higher. And if you combine this with a currently weak US dollar, there is definitely some further room on the upside, which could then push us, if we make it above 36, to towards the region around 140 here in the upcoming weeks. So very similar picture in the GBP as in the Euro, even though we have to make it here above that level around 35.50. If we don't make it above that level, that's the first not very positive sign, even though pullbacks towards 134.50 here are probably potential long triggers against which you could try to anticipate breaks on the upside of the 2017 yearly highs. Also very interesting, in fact, to note, so the main driver for the current US dollar weakness is, in fact, yields coming down. And this is one of the reasons why gold is performing very well currently here on the upside. It's not just yields, in fact, it's also seasonal driven. So usually gold in the last weeks of the year is very strong. And I was very skeptical. That's something I have to say. After we broke out here about 1,260 USD per ounce, that was in fact, in my personal opinion, a bearish sign here. Even though several weeks before that, I had a very positive outlook here for gold, a year-end a gold rally, if you want, or a golden year-end, I've called it, and. So right here, we are currently seeing what I expected to happen already around 1.5 months before. And with this push here, my outlook is in play again. So any pullback around towards 1,290, 295 USD here per ounce is probably something which should be considered. Okay, which should be considered. Something which should be considered a potential long trigger. I'm sorry, I just lost my thought here a little. So it's a potential long trigger, 290, 295. And if this happens, it's also possible that this pullback will happen in the next days here. From here, we could easily see further gains then in gold, which could push us as high as 1,360 and probably above that level here in the upcoming days. Not upcoming days, upcoming weeks to months. But all in all, I'm still very positive for gold. It has also something to do with the fact that here the flattening yield curve, US yield curve, to 10 year is, I have to say, something which definitely favors a longer term gold engagements here, and where probably 1,400 USD per ounce is a very, very conservative target. In fact, we can easily push higher than that. Yeah, so that's it around gold. And while we are talking about yields, we also have to look at dollar Japanese yen. You probably remember that I was very, very, very skeptical about a dollar Japanese yen after being really bullish, in fact. So that was around and shortly before my bullishness came out of the fact that dollar Japanese yen is probably strongly yield related and yield driven here. And with the tax reform here around the corner, it was likely that if it passes the US Senate, that dollar Japanese yen can take off from here. And in fact, it took somehow, even though the attack around 114.50, 115 didn't happen. And so far, that was already a sign of weakness. So there was another slight attempt before Christmas. But this attempt failed also, and now with dollar Japanese yen coming under pressure and seeing that U.S. equities haven't seen any kind of risk-off move here. So again, even though you might say, hey, look at the European equity markets, isn't this a sign of risk aversion? I don't think so. It's mainly euro-driven, but this can definitely change once U.S. equities start to also push lower. And if this really happens, then the Japanese yen, in combination with the current US dollar weakness, plus the risk aversion dollar weakness, plus the flattening of the US yield curve, is probably something. And by the way, on top of that, also a sentiment extreme in the Japanese yen commitment of traders report showing that speculative engagements here are currently heavily Japanese yen short. If you combine all this, there's definitely some further room on the downside for dollar Japanese yen now. It could be that we are about to see at least a push down towards 111, probably also more significant and more aggressive move if all these forces like yield flattening, risk aversion, sentiment extreme being reduced, if all these if this combination really works out here, that we could easily and significantly push towards 110 and significant below that too, towards the lows here from September around 107, around 107, 107.50. So what I want to say is be really careful in terms of long engagements US dollar right now. The US dollar seems to be really weak, and dollar Japanese yen as Euro USD, dollar yen on the downside, Euro USD on the upside, they have some further potential here, definitely. And yeah, so that's it from my end. Happy trading. Watch your stops, and talk to you again then in no, not in, but tomorrow. Tomorrow at 10:30 a.m. GMT for the morning meeting. I definitely look forward to it. And yeah, so that's it from my end. Talk to you tomorrow. Take care of yourself, and I look forward to it. See you, and bye-bye.